So gold, Nugget, the bull 3 times gold miners. I try to remain as unbiased as possible. I just talk about the technicals and the price action. I have no special sentiment to Nugget or being bullish gold. It's just kind of my thesis at the time. Therefore, you don't see me, looking at the dust chart so much. The reason I don't do that is it's not like a stock, it's an ETF. These are inverse each other. Sometimes it makes sense to look at the inverse in a way, but as far as my analysis goes, I put a lot of time into these charts, and I don't want to do twice the work and review the same thing twice in these videos here. I want to try and keep them under 10 minutes each. Let's go to the fib time. So we go from a low here to a high. This is where I drew it, and we come down here to a high over here, and right here I have a feeling might be a high. What's my thesis on this? Well, I kind of explain that thesis here in this box, but I'll give you a quick analogy. And basically, if you're at the beach or the ocean, basically the waves come rolling in and they subside. They do not just continue to rush onto the shore and wash up unless it's a tsunami or whatever, which I think we might have here, hopefully. But basically, it ebbs and flows. The market is never a single direction up. Stock prices are very directional. For example, you can see we are in a down channel right here. So prices are directional, but the price movement is very ebb and flow. Now, an interesting thing that I noticed here, this is going back to the start of the year, is you can see that we did not just go straight up here. I mean, you can make the case that we did here on maybe the daily chart or something, but I see a wave here. This is a wave crashing in, and then it subsides and we go higher. The exact same thing happened here on the second, bullish run that we had here. We come up, we make a 50% move, and the waves roll back. When they are back, we run higher. Now, I see the exact same thing happening here. We were coming up, the wave is pulling back, and I have reason to believe that we are going to probably head to this zone. And I've got a lot more technical analysis on gold to support that. But let's just read this quickly. So a break of a horizontal trend is often followed by a large increase in volume, and stocks seldom manage to go directly from the bottom of a trend up to the roof. Stocks turning up in the middle of the horizontal trend are therefore considered to be potential runners. So let's go ahead and look at the technicals. So we're on the 2 hour, let's go to the 1 hour. Actually, I think I might have had a divergence there on the 2 hour. I did. So this is a bullish divergence. So our stochastic comes up and makes a high, and then it makes an equal high, while price makes a high and then a lower high. This is the reason I'm excited about this little teeny divergence in the overall picture is that it's on the 2 hour chart, and as you get higher up in time frames, it's harder to find divergences on stocks. That's why I try to do most of my divergences on the hour and sometimes the 30-minute. So from the 1 hour, let's go to the 30-minute and take a look at what we've got here. So I think we are in a descending triangle. Now, descending triangles are typically looked at as bearish, just because price is getting rejected off of highs, it's not breaking out, it keeps testing the support level, and they're absolutely right. Oftentimes, descending triangles do break down. However, I think a differentiating factor in this case is that price moves up into the trend. So we set our resistance here at our high, we move down, set our A, B, C, D, and I think we just set our E. And this is further supported by the amount of consolidation that we have leading up to the apex. Usually just from E, we just break down, but we didn't do that. And we actually broke out. We were positive today. We got above this trend line for the first time. And I thought it was very interesting and exciting just because Nugget is my second largest holding. And I really enjoy this, $6 pop that I think that we might see here. And I go into that further in GDX's chart. But let's go on to the 15-minute. And hard to see there. Let's go to the 5-minute. Small divergence here. In the 5-minute, we've got a high, and then a higher high, and price stays exactly the same, and we shoot up the next morning's open. So let's go to the 1-minute and really dive into what the descending triangle bearish version looks like. We are in the bullish version right now on the 30-minute time frame, hour time frame. We're in the 1-minute time frame, and I think this is literally like perfect every step of the way what a bearish descending triangle looks like. And I think that the reason we're having this bearish descending triangle is we broke out about 70% of the way to our apex. Now, typically price makes its actual move at the apex, like I said in my, I think it was SOXL, Soxel semiconductor analysis, is that I showed that price came down and then it retouched the apex after its breakout. And I think that we're doing the exact same thing here. So we come up, and I think we're going to come back down and retouch it. So this was Friday's price action, and I wanted to walk through what I saw throughout the day, kind of. I say kind of, I didn't catch it until we set in this C wave basically right here. It's very hard to identify anything this early, but I went back and really dived deep into it, and let's just go through it. You can skip this if you are an expert in descending triangle breakdowns. Otherwise, I'd love to have you stick around. So this breakout right here, this is our pole. This is our pole number 1. We draw this blue line right here all the way down to our breakdown, which is this support line right here. We run the support line all the way through. So this is our first resistance zone. This is our first support zone. We come up, we set our A wave. Let's just go through the A, B, C, D, E. E is at the top here. And like I said on the hour chart, usually when we set our E, we don't consolidate here and break out higher. We just kind of dump. But so I've marked this resistance. This is our pole 1, and this is our first support zone. This is our support zone because when we come down and break down below it, price resists off this level. So this is actually our first resistance, but this is the support for the A wave. And I labeled this second line the ultimate support, support number 2. So number 1, number 2. And this is important because it helps us identify different apexes and turning points in the price action as well as the poles. So we run on up here, we set our high, and oftentimes you'll see this in a descending triangle is that price will poke its head out and try to get interested buyers coming into the market, and it's a false breakout every single time. And usually we come right back down to support. Now this is our pole 2. It's a lot smaller than our first pole. Our first pole comes into effect at the apex of this descending triangle, and this false breakout marks our ultimate apex point. So I drew this in our dashed line, and this is going to be our ultimate apex. And you can see here that this pole right here at the apex comes down and touches our previous descending triangle resistance line. This is actually very bullish right here. If it does touch this right by the apex, this would be an excellent buy point right here, down at the 33.30s in my opinion. But anyways, this is our pole number 2. Come down, set our B, and then our C is supposed to have our third pole in it. So when we sell off here, this is our third pole. So we've got pole 1, pole 2, pole 3. We set our D, our E, and then a telltale sign almost always is when price moves down very smoothly like this, makes a high and then it just moves down very smoothly. If you just watch out for these, I guess maybe I can try and identify some in the other ETFs, but this is a telltale sign that you're going to break down lower. So C to the breakdown point, this is our new support. I guess this would be our support number 3 right here. So we only use the poles twice, initial pole and the breakdown pole. So from E to breakdown of our support level is our pole number 3 being used, and we use them in inverse order. So for example, we'll do pole 1, pole 2, pole 3, pole 3, pole 2, pole 1. So we come down and touch this, and this is now our new support line. And theory says that it should retouch close to the apex point, and we see that going on here, which kind of further supports my rationale that gold will come down, in my opinion, and touch closer to the apex point. So we curl back up, retouch. This is now resistance, previous support, resistance, and we break down even further. So once we lose this support, you see the pole 3 being used a third time, and this is our new support zone right here. Our pole 2 is used for our original apex point. Again, each of these poles is a clone of each other, so I'm not just randomly guessing at the prices here. They are the exact same length. So the original descending triangle apex comes right here. So original resistance, original support, they converge onto this point right here. I draw my pole number 2 to give me a guesstimate for how far price is going to drop. Again, if you catch it early enough, you can just draw this breakdown, figure out what your apex is going to be, and then use this as your profit target right here, the end of the pole 2. This is a measured move. And after this, we kind of get exhausted from selling. We completely filled this gap here that we had in the morning. This was a gap up from like 33.50 to like 34.50, and we start moving higher. We're getting exhausted here. We need to get closer to the end of our second pole, our second resistance zone, our dotted resistance, so we can drop for the apex and then break out. And during this, we can see a pretty textbook ascending wedge going on here. So supported by prices all the way, it comes up, touches, this is E right here, and we break out lower, come back up right where the apex would be to try to break out. It fails, and we move on lower. So ultimate price point for the buy, in my opinion, is this first pull, cloned it. This is the apex point. I think that this is going to be a very important time come Monday, as well as important price to hold. If we fall back into this descending triangle, that's bearish. But given the success of these other pull 2 and pull 3, I think that we are going to have a nice entry here, hopefully on strong support and bounce off of this previous resistance on the larger picture. One last thing I wanted to note, earlier in my video I talked about the descending triangle volume pattern. You can see here that volume is highest in the beginning, descending triangle all the way down, and typically when you set in your A, you'll have your lowest volume of the day. This is just according to theory. This is not my own analysis. I just been studying it, but this is, textbook. This is the lowest volume that we see. There's 0 volume right here, and we break out higher, descending triangle back down, sideways move into the breakdown. We break down. There's capitulation right here. We see buyers coming in and scooping it up, and descending volume all the way. So that's my detailed breakdown of a descending triangle pattern that we have on this breakdown for Nugget, and why I actually think that it might be a bullish scenario. So this is the ebb and flow of the market. It's not just a straight shot up. It's consolidation right here, and then just a measured move up. And I think that we're seeing the same thing here. We've got a strong move up, consolidation, breakout. And if you've been watching my other videos, we come back and touch this apex point, and we springboard higher after that. So there's the pattern right here. Let's go to GDX, and I kind of do a longer term analysis on GDX. So on GDX, we see this huge horseshoe pattern we've got setting in here, as well as on the daily, going back to 2011, this overhead resistance zone, which we are about to test right here. It's a very important moment for gold right now, whether it decides to break down or head up higher. In my opinion, I think that it's going to head up higher. Could very well be wrong, but as I described in the Nugget chart, it looks promising, I guess, at this point. We've got the June rebalancing of the funds coming up, which I think is just going to send a flood of buyers into the market and probably help us break out. First test is going to be to break out of this symmetrical triangle we've got going on here. So this is the first test, and then as soon as that rebalancing comes, I hope that we're going to be able to break out for the first time above this long-term consolidate or long-term resistance line. So on the daily chart, what do we have going on here? Well, I drew this important this bull bear scenario right here. This is, in my opinion, the bull bear support line right here at 22.20. We have basically been bullish most of the time. We did drop down here, but since then we've done a pretty good job of staying above it consistently. You can see the number of times this level has been tested. We come down, we bounce off it, we bounce off it, we bounce off it, we break down below it, we fail to break out above it, we come back down, we break out above it, retest, break down, and then we are where we're at right now. So this is an important level to hold. So on the daily, I found a divergence, which is interesting. So I've got this blue highlighted line moving from the swing high down here to the low, to the lower low, but the stochastic has essentially stayed the same height across the entirety of this move downwards. So this is a divergence in stochastic. You don't exactly see that on the RSI, which is why I like the stochastic for identifying, support resistance, for identifying divergences on different time frames. So another interesting and important thing to note here is that we have not fallen below this 50 RSI. If we have, it's not been for very long. We've just been floating here for a long time now. Another reason why I think that this might be the ebb and flow of the price action. You see this going on over here, and where we just stall out over here on the 50 RSI, and then we finally break higher. We see that over here, we kind of stall out, and we break higher. I think that we're seeing that right here. Whereas if this were the bear scenario, you can see that there's just kind of a breakdown in price and RSI here. We don't stall out here for very long. We just go straight down. Again, over here on the lower leg, straight down. So I think that this is bullish, that the RSI wants to stay above 50, which is a bullish scenario, I guess. Anyways, so that's on the daily time frame. Let's see what we have on the 2-hour. So I just first off want to say that this line I drew right here is what I'm expecting for volume in the coming days and weeks. I want volume to kind of move up and then come back down and get very low right here as we move into the apex, and then I want it to shoot up higher. And the reason for this is that's what general theory says. An example of this is you can see over here right on the reversal, we moved very low in this kind of semicircle pattern right here, and then we see a ton of buyers come in and buy that dip. So on the 2-hour chart, what do I see? I see a symmetrical triangle coming on inside of a larger symmetrical triangle. I guess this bottom symmetrical triangle or support zone is the ultimate apex point for this long-term 7-year or 6-year resistance that we've got going on here. But so I see A, B, C, D, E here, and E will shoot up higher in theory. But you could say, price is falling, which I have been very wary about. Falling price into the trend is usually not, all that great to see. However, I thought about it, and price rose significantly here into, the kind of start of the trend in a way. And then we came down and set our A. So I don't think that this is the initial leg down. I think this is the initial leg up. And therefore, we come down and set our A, B, C, D, E. This trend line right here just works better by connecting all three of these points. If you want to look at the time fib, we've got a low here, and we've got a high here, a low, a low, a low, halfway move, and then this next time fib is basically right at our apex, which gives me further support that this smaller symmetrical triangle is valid. All right, so from the 2-hour, let's move into the 1-hour. All right, let's zoom up and get in close and personal, I guess. So I see some divergence right here. We've got a high, higher high, and then we've got a high and a lower high. It's a divergence right there. And then like I noted on the daily, I see it again here on the hourly. We've got our stochastic making equal highs while price moves lower. And then from this bottom, this C wave here, I see us coming in and breaking out. This is our 1, 2, 3, 4, 5 into this descending triangle that we've seen for the last week. From this breakout point to the high right here is our pole number 1. I just explained that over in NUGT, and we set in our first resistance zone, come down, confirm our support zone. So this is now A, B, C, D, E, and we see a break out of this for the first time, and we see consolidation right here as we move into the apex. If you're still skeptical about why I think this is A, not the other way around, not A, B, C, D, E, and this is a bearish scenario where price would move downwards, is again, the stock price moves in fractals often, I find, and you see this large leg up followed by this large leg down. But this large leg up into the price pattern is bullish, and so even though that we drop right here, the initial impulse wave would make this a bullish trend. Descending triangles that are bullish often happen in the first wave of a 5-wave Elliott. And let's just continue on with the analysis as I see it. One thing to note right here is I guess I've got my ultimate buy and ultimate sell. This is where I'm going to determine whether I'm bullish in the long term or bearish in the long term, is these levels right here. These are not random levels. These are Fibonacci levels that I've determined right here at about 21.25 and 24.20. Notice how this bullish scenario, if we do get up here to 24.25, is a breakout technically above this, what has been this resistance line for this symmetrical triangle. This is coming on to be, about a 9-month symmetrical triangle, which is, a fraction compared to the long-term overhead support. That's why this is a bolder line and this is a thinner line. But now that we talked about that, we talked about the divergences, the pattern, the ultimate, price paths that I see. I see us moving up to D, hopefully, because I am bullish, breaking out, coming back down to retest this E right here. This is the important point in time, whether we decide to test this E, this firm support level that we've had for the last 2 years, or if we break below it and go lower. If we do break below this, then I think that the bears will be in control for several months to come. But I have this rectangle right here to be my entry point, but we are not quite there yet. So let's zoom into what's going on in the now. Watch 15-minute. What do I see? In the 15-minute, I've got a divergence right here, which might have led to this leg upwards that we're seeing. And I see that we have a lower price and then a lower low. And right here in the stochastic, we have a low and then a higher low. So this would be a hidden divergence. We have our pole number 2 right here. And pole number 2 upon breakout marks this point right here, which in my opinion will be the third Elliott wave on the way up. And this pole right here, which is our initial breakout zone upwards, comes over here. And this is the rebalancing, I guess. And I put it from the support down here all the way up here to the breakout zone above this symmetrical triangle. I think that this will be a false breakout. And again, we still have to set in our E wave down there. So zooming in past the 15-minute, we're at the 5-minute now. 1 minute, if you want to take a look at volume, just look at the number of shares that were bought at the end of the day here. This is insane. You see that price only, or volume only really ever gets this high at extreme lows. And this is not an extreme low, and I think that it actually might be a reversal. So, like I talked about in Nugget, here is our descending flag pattern that we've got going on here. Again, I think we're going to come back and touch about right here, and then shoot up higher. Let's go back to the 15-minute so I can talk about the price moves a little bit. So I think that once we break out, we're going to retest this D. I think we're going to consolidate a little bit. We're going to break out of that, retest this B, consolidate. And then for the third leg, I think that we're going to retest this prior high. And I think that we are going to get higher than that, because if you look at previous prices, they have moved higher than this consolidation zone and gone all the way up to touch the prior resistance. So I think that we're going to get above this 5. We're going to consolidate around it for maybe a day, and then I think we're going to break out. And I think that ultimate destination is going to be 2420 about, and that would line up with my pole number 1 measured move here. And I do think it will be a false breakout, but that is extremely bullish if we do break out. And then I think, we're just going to waterfall back down here, and this is my second entry point. And from here, ideal scenario is that we move up, we flag for a while right above or right under the support line, and as we come into the apex, we break out more. You can kind of see that scenario play out here. What I'm looking for is this breakout point, consolidation into it. I mean, this is ideal right here. This is perfect. All right, so that's my analysis on what's going on for GDX right now. I think that short-term bullish, medium-term neutral, I guess, because I do think that we're going to head back down. And long-term, I have the case built for a bullish leg up. And there's a nice profit to be made in Nugget or JNUG right here, catching this halfway move in between this low and this high. All right, that's been my analysis for gold. Let's move on to biotech next.